Now, the thing you have to remember with these companies, if they're innovators like the Apples, Microsofts of the world, they're going to do a lot better than their peers who are not doing as much innovation. But even so, the whole sector is going to benefit by the positive news that we've been hearing in the economy, and that the fact that the Fed is going to stay the course with any particular position you might hold. You can't be too emotional about holding that particular stock. You have to be super selective. And that's why I mentioned before, you want a dominator in the industry. I always cite Apple because they're always coming out with innovations. Even though the stock has been sluggish at the beginning of this year and the end of fourth quarter last year, it has since regained some of its momentum, and we're seeing it move in a positive direction. I would also say to investors who are in the tech stocks, make sure if you're looking at the moving average of the index as a whole and look at your stock and it's not responding accordingly, you may want to ask your advisor or yourself, is this the place that I want to be, or do I need to be looking at other places? Because once you ask yourself those questions, you're going to feel more comfortable about making a move and moving in the right direction if it fits with your investment philosophy. And the thing you have to remember about wages have stagnated for more than a decade. As a matter of fact, if you were looking at the chart on how wages versus a CEO's salary has grown over the years, it's a remarkable difference. And the thing to keep in mind is, in the beginning of this century, unions and other organizations would go and appeal, whether by hook or crook, we say here, they would go to the companies and say, hey, you got to pay us more, you got to give us more benefits. Now it seems that movement, albeit not union, but workers are coming back and say, hey, it's been a long time since we've seen a decent wage, and bit by bit they're starting to come back. Now that doesn't mean the companies are going to respond all at once, but bit by bit companies are going to have to decide how important their position is in the market and to stay ahead of their competitors. Will they increase wages to fall in line with the cost of living? Because that's the big argument right now, that inflation erodes the dollar value. So the value of a dollar back in 1987 versus the value of a dollar now, it's about 14 cents to the dollar right now. So if you look at the stamp, back in 1987 is 14 cents, and now we're above 55 cents. So the value has eroded because of inflation. But the thing to keep in mind is that as workers, they have to keep growing. They have to keep seeing wages go up, and companies have been slow to respond. I believe that we're at a turning point, and that companies can no longer afford to ignore the trend that is coming, and they will be forced to raise their wages. Inflation and interest rates, they've kind of hovered at the same level for quite some time. We're not seeing any particular huge movement, per se, but that doesn't mean we're not watching it. As money managers and the like, we're always on top of these numbers. But the Fed has kind of given us that guidance that they are not going to do anything for the foreseeable future, and that trend that could last into 2023. So beyond next year, unless inflationary moves start to occur and the Fed must respond in kind, that's when I foresee something like that starting to make headway. I don't see that right now. The numbers don't support it, and we feel that inflation is going to be held at bay for quite some time. My feeling personally on this, at least through fourth quarter 2022, first quarter 2023. Caution everybody to not take positions in at-home stocks at this particular point because of the vaccinations. We are hitting records on daily vaccinations at 3 million plus. So at a very, we could reach herd immunity by the summer. Right. So people are maybe going back to work a lot sooner than they thought. And companies may be telling their employees, hey, time to go back to the offices and the like, once that herd immunity has been reached. So that in case makes the case that productivity is going to go up. That growth in the economy is going to continue, and that's important because that's going to keep fueling the economy. Plus the surplus that the government just gave out was long awaited and long overdue, and now people are spending some of that money. But from what I've heard and what I've talked to people, they're not spending all the money. They are actually investing a small portion of that money in the market. They are actually putting some into their savings, and some of it is going to be used for some discretionary spending, which will fuel the economy and grow and this expansion a little bit longer.